What is going on, everybody? It's your man, Why Me, back with another edition of the ExxonMobil stock technical analysis. Sorry for the missing day on Monday, October the 23rd. Had some personal things to take care of, but like I said, we're right back at it with another edition. Today is Tuesday, October the 24th, 2023. Today we're going to start off with an article dated October the 13th, 2023, regarding the merger between ExxonMobil and Pioneer Natural Resources. Does it have or will it have long-term major ramifications? ExxonMobil has agreed to acquire Pioneer Natural Resources in an all-stock transaction valued at $59.5 billion. The deal will allow ExxonMobil to more than double its oil and gas production in the Permian Basin and capture $2 billion in annual run rate synergies. So fast forwarding, October 11th ended up being a really fascinating day for shareholders, two of the largest energy companies in the U.S. After several days of speculation, news finally broke that the energy behemoth Exxon and Pioneer Natural Resources merged. $59.5 billion once again. But as we forward into this week, we received news again that the stock was devalued. The price target was lowered for Pioneer Natural Resources at the end of last week, which caused the stock to fall, which caused ExxonMobil to fall, and it caused Pioneer Natural Resources to fall. So if we go into the charts for Exxon specifically, because again, we're just talking about Exxon, but we do have to evaluate all of the other impacts and things that affect it. Going into the weekly chart, okay? So we are in the earnings week. Friday, October 27th, is an earning for period ending September 23. The estimate is 2.373. The revenue estimate is 93.4 billion. So let's see if it hits. Opening the week again, we had a weekly open at 110.63. Taking us down to a current price of about 108.34. So on the weekly, we could again see the completion of that formation. Now remember, I was super bullish, obviously until that news came out, which caused some disturbance. But there's also a situation where we had a double bottom a few weeks ago at 104 and at 105. Just completing this formation here from this huge two down to start off the month of October, we could very well complete that formation back at about $106 or lower. And then even in a lot of situations, when we have that double bottom, what I learned from some other people who trade the strat is that this particular candlestick, or even any future candlesticks on the week, could fall lower than where the double bottom exists, or the most recent double bottom exists. So there's a situation where we also do have to now keep our eyes open for levels of support, but also for where they can take out liquidity. So according to my previous trade plan, as far as the stock increasing off of, which week were we? Oh, I'm sorry. The stock increasing off of this 2-up week was that, there would be enough liquidity to take us higher. That was an assumption. Apparently, we met our liquidity targets here at about 113.94. I remember having a price target of 114 for Friday, which we did not hit, but the 112 acted as support and resistance during the pre-market and ultimately turned into a level of resistance, as you can see here. So now we are in a two down week to start it off. We're only on Tuesday. The stock has been trending downward, obviously, since last Friday. And what we're seeing is we're finding our levels of support at 107.83 and 107.09 and 106. So if we break any of these levels, obviously we go to the next level. If we rest on any of these levels, we also want to watch out for anything that will take us below, such as news, bad earnings, even good earnings. Sometimes if the stock hits earnings, there's sell-off. because that's seen as an opportunity to also take profit when it could be seen at its highest. So what we need to understand going forward is that we're now in the realm of having two possible well, there's always two possible scenarios, but now we're in the realm of having two possible scenarios where if we remain inside, will we go lower than this two candle that started off the month? If we remain inside for the last week, the last week of October, or if after we have earnings for the final week of October, will we remain inside but go up from any of these inside candles here? So again, are we going to find any type of resistance higher than where we found it earlier last week, which was 113.94? Are we going to find any resistance higher? Any liquidity zones up above 113.94 would get us into the higher teens and even possibly the 20s still. We're going to go into the Webull chart to also analyze what we have over there. But just even on a smaller time frame level, where let's just even go to 30, we can see that the stock is relatively flat over the last couple of days. Obviously, since we met this liquidity zone here, I'm going to attempt to draw a box again because you know how TradingView does. I think it's inverted. All right. But now that I got the zone down, like I said, we have a liquidity zone here in the 112 to 114 area that caused a lot of profit taking. And even on the reaction to the news possibly caused us to fall. So now where we are is in completing this formation from last week. Could we go back and to complete this formation from the week before, where we found ourselves at 105, below 106? And to start off the month, sorry, I'm on a 30, so it's going to take me a minute to scroll back over. And to start off the month on October the 2nd, could we find ourselves back up again in the 14s? Remember, my earlier price target from Friday was 114.25. So if you look at this particular line here, this is at about 114.50, bottom of the gap, 114.60, bottom of the gap. So we have a couple of scenarios trading in channel. The liquidity zone at the top last week proved to get us into a nice, bearish market. We're finding some levels of support at 108, but we've also cracked those and are trending downward toward 107. The gaps here again at 107.43 to 106.30 approximately. And so we could find ourselves reaching that double bottom that we spoke about when we, even began these video series at around 104. The lowest we can go is 99 to 100 for another possible bull run that could last us a couple of months. So we'll see. At this point, the double bottom is here at 104, 105 level. And so being at 108, we're actually much closer to the double bottom than we are to, 112 or 114, that liquidity zone again. So I'm interested to see how the reaction is to the charts or with the chart in the charts when we reach our earnings, which is going to be on Friday. Earnings will be before the market opens as well, so you got to get up nice and early to check it out. There's a lot of noise here. Obviously, this is my Webull chart where I can do the most, reckoning and things like that. But like I said, where we can see, that from a daily perspective, again, we've met our high This is that 3 candle. Indecision. So, definitely, from a strategical perspective, you probably have to be a little smarter when you see indecision like this. 1019 should obviously take you back down. But, you don't always see that. You can also see indecision being this candle forming above this doji. But previous dojis sort of created, as you can see here, here, previous dojis in this respect with this exact formation right in the middle have created some downtrends. So, we'll definitely have to see that in the charts on the next run. But we'll stay on this particular section here, bottom right. And if we're looking at the weekly, we can obviously see that we're inside. We're still inside this huge candle that took us down at the beginning of the month of October. So we're much closer to the bottom of this candle versus the top of this candle, which is 117. So based on trend, we're likely to go or fall toward the bottom of the candle before we reach the top, even with a good earnings. So let's look out for it. If we go on to the next 4 hour, you can see we have a gap here and we've reached it. We've reached back into the gap zone that I spoke about when we first started. We've reached back into it. Top of the gap is about 108. And anything below that takes us to around 104, below 105. So between $104 and $105, anything below this gap takes us to. Strong resistance occurred at $114, so we didn't even get to see that additional 25 cents before it fell. Strong resistance occurred at 104, around 114. So if you look at all of these things and put them all together, my sentiment at this point is to obviously look for the completion of this formation back to that major level of support and those double bottoms that we formed at 105, 104.80, and anywhere below that could be a combination of the downgrade of the acquisition, more bad news, and we definitely would need to find levels of support there so we can go back into a bullish run. But you also want to look for downward trends that take you back to, again, 105. So for all the bears out there, we're looking at a downward trend to take us back to 105, closing below any of these levels here, this major candle here. If we reach below that, again, we're back into the gap, which is a small gap, but we're back into it to take us to 106 and 105 areas. So with that, not much action as far as price goes today. Sort of vanilla, not many spikes. This is a 1 minute chart in the top left hand corner. Monday, again, the same thing, a couple of opportunities for trades, but from 110.24 to 109, so about $1 move. Another move here from 109 to 110.63. So not much action, not much volume. I understand that there are many investors that are selling until they can catch a better price off of what they may consider the bottom. And so we're looking at those possibilities. Not much action, like I said. Not even so much choppy, but just not a lot of price action there. Just seemingly people looking for, small, short opportunities and scalps. But if we go to the top right-hand corner on the 30-minute chart, which is literally like my favorite time frame, we can see the formation was completed. October 23rd, we completed the formation. We went back to test a small little level here. But again, we're back into completing this formation. So I would say the bottom of this formation, not including the full gap, would be 106.94. So we can look for any puts, protecting yourself and catching it from a level of, such as this into 106, 107. Obviously, any uptrends, protect yourself, or if you're, a bigger risk taker, can average in. But make sure you definitely look for any news that'll take it back into, a bullish territory. If you turn back on my trend lines here, you can see if you follow this black and green area, these parallel trend lines are taking us back down into a trend to meet that 104, just slightly below 105 level. You can see the double bottom here and here from the week of October 6th and October 11th. So you can see, the double bottoms here. Oh, sorry, the days of October 6th and October 11th. You can see the double bottoms there. So what we can assume based on price action is that we continue to take out these candles, which we've taken out this one so far, and we're into this candle. If we find ourselves another day completing this formation and taking out these candles, we end up back at 105. Now, if we start a new month and the earnings are good and we find ourselves back at this double bottom, we could break through it, or we can find support, because no matter what the earnings say, we always have to look at what the price action is and what any news is that could also act as a combination and giving you the sentiment. So as I summarize here, like I said, not too much action on the charts today or yesterday. A couple of plays here and there, but what we're looking for is another major area of support and or resistance, I would say, based on the earnings information that comes out at the end of the week. There are a lot of people who don't play earnings because it could create a lot of volatility, uncertain volatility as well. So going into it, you should definitely be objective. And as we can see on the 5-minute chart, we're still trading in our major trending zone, and we're also even trading in our smaller trending zone. Any up opportunities at the moment, it doesn't seem to be. There seem to be a lot of investors sitting on the sidelines waiting for some confirmation to get back in. Because a stock like this, in my opinion, it should be bullish. A commodity such as oil shouldn't necessarily be an underperforming stock or a company that can expand or I would say better their geographical footprint. So we will want to see nice or good sentiment rather for a stock like this versus bad sentiment for a stock like this. So in essence, as far as like a commodity such as oil, we all should be bearish on it in terms of it performing well, it being affordable, people filling up, et cetera, et cetera. So that's my thesis for today. Look for, short opportunities, especially breaking, some of these candles that took us up, and we're going to complete the formation. Look for that opportunity. You see the double bottom here. The second double bottom started the uptrend, but it took us into a nice liquidity zone at 114, and it took us back down to where we are now at about 108, just give or take a few cents, 108.64 right now. So, be objective, follow the price action, look for structure in the charts, and, we'll hopefully all come out successful with all of those skills being applied. This has been another ExxonMobil review. Today is October the 24th. We hope to do another review very soon. Thanks for watching.